Hello and welcome. It's Thursday, 7th day of June 2018. My name is Derek and this will be a silver video. I don't do as many of these, but there's a reason for that. It's not because I'm favoring cryptos more than it is of silver, although I'm definitely trading it more actively. And I'm using cryptos, of course, to accumulate silver more than anything. But it's an interesting chart. It's very much indecisive, neutral. And you can say, oh, it's all a manipulated chart. And, well, if you say that, if it's manipulated and you know it, clap your hands. I mean, whatever. It doesn't matter. Interesting pattern, however, with this support and resistance that's been going on since this leg lower. This big failed breakout. I mean, its fast move lower technically was a lower low to here. I mean, I can't count this as a failed breakdown. It's got to have a decent size break of the support for it to count. But usually, if I'm looking for a pattern after this, I'm looking for this to find a way to support this area. However, it's been very neutral within this time frame, which is the last several years as the time frame. Because when we look at this on a weekly term, that's support and resistance lines that I can draw in here. And I can even go further on this with more years. There's the support area. And there's the resistance. So you can say a little bit of a descending triangle, and oftentimes these neutral patterns will resolve themselves in the path of least resistance that it came from, or its last previous trend, and its last previous trend was neutral. So we should go from neutral to neutral, and I'm kidding when I say that. But when I look at this even more further, I've seen how this level of support, which was the key level of 2008 and 2010, has been resisted. So I can make a long, put some lines here. But I see price action in the middle of these lines pretty much. And this upper line could be north a bit because I could be probably drawing it close to here. But there's a decent amount of room that it needs to even go to just to get out of the more sideways consolidation that has been going on for quite some time. When the monthly term time frame for this, beforehand, when we look at this historically, here was a situation, and they don't have TradingView, older historical data for silver. I got a lot of it from 1968 on. However, the big range for a couple decades was mainly between $4 and $8. It had gotten down to $3.50, but that was just small piercing of the break below the support level. So 4 to 8 was its range. So it was making a rally, but it was still got a long ways to go, just making it to the top of its range, which was right there. Overextended on the short term. So you have this big red candle down move with an obvious trend at this point. No surprise. But this is what I like to see, how a market reacts to a particular situation. And in the situation of coming up to previous major resistance for a 20-year resistance period, coming back down within its range area, but a higher low to the 18, a few more periods up, making a higher low, that we're seeing strength amongst the 18 overall in here. And when you see that, you can't be surprised that you have several green candles up, because it was showing strength amongst the 18 average of highs. It never even touched the 18 of lows. And anytime it did, obviously the bulls came in at this time frame brought it up. But also what you're looking for in technical analysis is for levels to be established. And $8, again, as I was pointing out before, was a major level of resistance. And there we have it. And you have to be fast with these markets too, because it breaks resistance on December of 2005, and then it has this 16 or close to $16 top in May. Now this was big because this was getting us back to the 1979 and early 1980s levels of double digits into the 20s. Here was a spot where it consolidated well amongst the 18. It showed a lot of strength amongst the 18 average of highs, never broke out, but never really broke down much either, thus showing strength amongst the correctionary phase. Here's 3 candles in a row where it's staying amongst the 18. That is showing strength again amongst the 18 highs. So you have that big green candle up. You can't be surprised because the patterns were telling you that. It was also showing you nice breakout moves for a decent sized gain. Again, you had to be fast to take it because you had the summertime collapse. Now, how does the market react to this down move? Obviously, this is a low it hasn't seen since, so it did pretty good. But there's 3 green candles coming up to the lows. You still got to even get past the 18 highs. This is just the first area. Of course, you have a big move. You're always concerned. You're going to come up to this area and then lower high it and then make a new leg lower. But when you see a spot where you have a few periods to go up to this, couple just hanging in there, and then a move like the 18 like this, now you'd be talking about, hey, is this a failed breakdown? Because this is what I look for in technical analysis, patterns like this, where you have a key level of support that it breaks down noticeably. Doesn't spend too much time below it, but you can easily on the chart make a box like this. And then you follow through with what you've seen here. See, this is that move to the 18 that comes back down into the band. But here we again are seeing strength amongst the 18 average of highs after you notice the failed breakdown. Now, fast move, you'd be expecting at least a move to the 20 number because you'd expect to at least go to previous high. Now, fast move obviously was going to go to 50, but what do we want to see happen in technical analysis as time goes on? Levels of key importance. And each time the market just chops around like this, it's establishing this level of resistance to be a big one, so that when an event like this takes place, you see in the market 24 3/4, it's something you wanted to take seriously. But again, you had to be fast to ensure if you were going to take any profits on the swing, or at least if you're playing market movements, you're like, oh, you see this failed move, fast move, you see the strength amongst the 18 average of highs before the breakout, and finally the break of the resistance, that it's now setting up where when are you going to profit kind of deal. This was the only time you had for that profit, because after this we've seen when it comes back down to the 18, it was unable to get above the 18 highs. Thus you now twice establish this $26 support level, make it 3 times, and then it rallies again to the highs. So it was developing a sideways range at this time between 26 and 37, and then when it broke this, and there was really no indication of knowing until it either breaks this resistance or support, that you cannot be surprised to have a little bit of extra leg move lower. And you see how the 18 has kept on rejecting every single one of these rallies, like it did not do back in here. It didn't reject the rally here, but it did here. It most certainly did in that spot here. And then for the last time, so far anyway, well, the last 2 times it rejected it here, and then it rejected it here. That's the last time that the market rejected the 18 average down move. because it's all a waiting game. Yep, you wait. You wait, you wait, you wait, you wait. Reversal of trend. Number one, this band has to flatten out. So it has to stop resisting the 18, which happened in here. Finally, it managed to get above, have a decent leg above such, thus band flatten out. Stage 1, establish resistance, stage 2. Had to wait a few periods for it to come back in here. And now it's been a couple years of just waiting and waiting and waiting. You know, one of these days I'm going to come out and do these videos more often. But until this type of pattern stays in place, it's really hard to do so. Thank you for tuning in, and have yourself a magnificent day. Bye-bye.